Hyundai Engineering IPO raises concerns over value of Hyundai EC by Park Jae-hyuk. Hyundai Engineering's planned listing on the benchmark KOSPI market next month is prompting investors to continue dumping their shares in its parent firm, Hyundai EC, based on the belief that the former will become the nation's largest builder in terms of market cap. According to Hyundai Engineering's prospectus, Tuesday, its market cap may reach up to 6 trillion won. Immediately after its initial public offering slated for February 15, if its IPO price is set at the top end of the range. Some securities analysts even estimated the company's valuation at 10 trillion won. In contrast, Hyundai EC's market cap has remained below 5 trillion won, as its stock price has continued to spiral downwards since the financial authorities gave their approval for Hyundai Engineering's listing last December. If Hyundai Engineering becomes the business bellwether, Hyundai EC could suffer an additional fall in its stock price, because institutional investors will exclude the parent from their index funds and exchange-traded funds, while including the subsidiary. Market participants have continued to shift their focus onto Hyundai Engineering from Hyundai EC, as the former is set to play key roles in the managerial succession of Hyundai Motor Group's owner family. Hyundai Motor Group chairman Chung Yoo-sun is expected to sell part of his stake in Hyundai Engineering after its IPO, in order to acquire an additional stake in Hyundai Mobis or pay taxes on the company's shares that he will inherit from his father. Hyundai EC, however, has yet to differentiate itself from its subsidiary in terms of business portfolios. Both companies have engaged in the construction of plants and housing, since Hyundai Engineering entered the field after acquiring another unlisted affiliate, Hyundai AMCO, in 2014. In terms of profitability, Hyundai Engineering has already outperformed Hyundai EC, as the former posted larger operating profits than the latter between 2017 and 2020, by expanding its presence in construction related to renewable energy facilities. Hyundai Engineering plans to focus more on environmental energy sectors, extracting hydrogen from waste plastic and carbon dioxide, as well as building micromodular reactors. It aims for its renewable energy businesses to generate 10% of its revenue within the next 3 years. Its ambitious plan is expected to enable the company to supply hydrogen to the group's hydrogen value chain. In that case, Hyundai Motor Group will feel less of a necessity to support Hyundai EC, according to analysts. Investors shifting focus onto Hyundai Engineering before its IPO will affect Hyundai EC's stock price, KTB investment securities analyst, Jae-hyuk, said in a report. This is regrettable ahead of the company's unusual structural reforms.